Hi, Harry here on June 18th. The markets are coming into a potential top near term, still always a potential top long term now that we're this far in the cycle. I always remind people on my natural and very powerful cycles, the 10-year, decennial, 20 and 40, and especially the 90-year cycle for bubbles. This thing should have peaked in late 2019, early 2020. That would have been the optimum time without all this endless and excessive stimulus. But of course, they continue to do that. And yes, COVID did give a big whack to the economy, but the central banks whacked back harder and way harder than ever. And that's why we've got the greatest rally from March 2020 to now in stocks that I've ever seen, and it is getting closer to a peak. It is going to peak this year or extremely early next year at the very latest. Now, one of the things I'm going to look at in the July HS10 forecast issue is that the corporate bond market is one of the best leading indicators for a major top like this. If you go back to the most applicable top, the September 1929 Dow top on the last 90-year cycle, and then the last time we saw a super bubble come to a peak. And by the way, a guy just made a quote in a newsletter said this bubble is in everything and twice the magnitude of anything we've seen before, and I agree totally with that. But if you look back at that, stocks peaked a little over a year. I mean, the corporate bond market peaked a little over a year before the stock market did in September 1929. About 1 year and 5 months earlier. Now, we look at the corporate bond market today, and LQD is a good parody of that, investment grade bonds, the ETF. That has already thus far peaked in early August of 2020. So if we take that same lag, we should see a peak, say at the latest, by January of 2022 in stocks. And of course, it doesn't have that, this has happened so rarely in history that there's no magic formula that has to be a year and 5 months. But it is clear in the past at times like this that the corporate bond market, since they're more sensitive to risk and defaults, will pick up a major downturn coming before the stock markets that are just going with the flow and party while the party's going. And that's what stocks do, especially at a time with very low interest rates and stimulus like this. So this is saying that the corporate bond market is probably the best single indicator telling us that we are coming into a peak this year. And another thing that tells me, since my long-term cycles most line up bottoms with the end of 2022, we could get a setup here where we peak somewhere between maybe late July and December or early January, coming up, and have a really, probably the sharpest crash. Now my megaphone pattern already says the first crash out of this bubble top should be down to 2,100, and of course it's been near 4,400, could get to 4,500, I think, or higher ahead. That's a 50 to 53% crash, first one, and I mean that'll happen in 2 to 3 months max. So that's the entree. But I think we could get the sharpest 1 year crash ever from sometime mid to late 2021 into very late, say December 2022. And then we have a bounce kind of like we did in late 2008 with the big crash before, more recently, and then a new low into early 2009. So I think we could get the final low sometime in 2023. It could even be late 2023 on this cycle because we pushed it so far. But I do think we will see the worst in 2022. I've always been convinced of that. That is the strongest lineup of all of my cycles. Again, 90-year and 45, 40 and 20 demographic, and 10-year decennial cycles in the end of 2022. So the more they keep this thing going, the way I'm looking at it, the sharper the reversal will likely have when it finally peaks and the central banks lose control and credibility. And I am hoping they lose credibility forever. We need central banks only to be a backstop in an extreme crisis, not to be a constant stimulant in our economy. And we need governments to get out of, lowering their currencies to compete unfairly. I think this whole crash is going to bring a lot of sanity to the world of finance and monetary policy, which means a lot less of it. Let the economy go through its natural cycles and only keep a real emergency from getting out of control, which can happen. But don't constantly stimulate economies and overstimulate and push your currency down. All this stuff countries do to cheat. That is what we need new rules for. And I think we're going to get that after this big crash. So again, we're on watch. I think this is not a top here. It still could be, okay? I would say late July is the next time. If we see a minor correction here and we get up to about 4,500 on the S&P, that would look like a very credible top. And then September after that, and at the latest, December, January. I think this is coming sooner than later. I don't think it's going to wait till January of 2022, but that's the outer limit. And we all have to get very serious about our real estate, our stocks and investment portfolios, and everything else, our business, and prepare for potentially the worst single year in history for the economy, 2022. Thanks for listening.